If you don't have a checklist as a trader, you'll be trading with emotion, and that will lead to overtrading, and the worst part of it, you'll be losing money consistently to the market. In this video, I want to show you the 3 things I checked before taking any trade. Because having the best strategy as a trader is half the battle, but the ability to stick to it at all costs is what makes you a better one. Let me first explain it to you, then I'll show you on the real chart. For example, when I open any chart, the first thing I do is to check the trend of the market. When I see the market makes a higher high, higher low, higher high, and higher low, I know that the trend of the market is bullish. But when I see market makes a lower high, lower low, lower high, lower low, lower high, I know that the trend of the market is bearish. After I know the trend of the market, the next thing I check is my trading range. So my trading range on the bullish side is from this swing low to this swing high. That is my trading range on the bullish side. Then on the bearish side, my trading range is from this swing high to this swing low. That is my trading range. After I know my trading range, the next thing I'll have to check is my point of interest. My point of interest will be on the bullish side within the discount level, either a fair value gap or an order block. So I'll mark my point of interest here like this. On the bearish side, I will mark here as my point of interest within my premium level, either a fair value gap or an order block. That is where I'm going to mark my point of interest. After I mark out my point of interest, is for me to just wait for the market to come to my point of interest before I will go to the lower time frame to look for a confirmation that truly the market wants to continue with the trend of the market. Now that you have understand the idea, let me take you to the real chart and show you a practical example on how to apply everything together. As you can see here, this is Euro USD, and on the Euro USD, the first thing I have to do is to go to the higher time frame for me to determine the trend of the market. With what we can see here, I know the market came from bearish to bullish. So after taking this point here, after the market took this point, it will have to come back at least to the equilibrium level. So for the market to come to at least equilibrium level, you will know, let me use the Fibonacci retracement. If I put my Fibonacci retracement from this swing low to this swing high, I know that the market retraces more than the equilibrium level. So I know that this swing, this reaction is correct. So after I know that, okay, this is my trend, the trend of the market is a high, a low, and a higher high. So after this, I know that, okay, the next thing for me to check is my trading range. So where is my trading range? My trading range is this high here, this high, and this swing low that you can see here. That is my trading range. After I mark out my trading range, the next thing to mark is my point of interest. So my point of interest is going to be within my discount zone on a bullish trend. So my point of interest within that discount zone is going to be either a fair value gap or an order block. So is there any fair value gap here? This is the fair value gap. As you can see here, the market just traded within the fair value gap and it fires up to the upside again. So these are the 3 things I checked in every market before I take any trade. So once the market comes to my point of interest, is for me to switch to the lower time frame to look for confirmation that truly the market wants to continue with the trend of the market. Let me give you another example. This is USD CHF. On this same 4-hour time frame, I know that the market is bearish. It's bearish because I see the market took this low and it reverses to the upside, breaking the low again. So after taking this low, I know that the market trend is bearish. So the next thing is for me to mark out my trading range. My trading range is this point here. From here to here is my trading range. So after I mark out my trading range, the next thing for me to mark out is my point of interest. My point of interest is going to be on my premium level, either a fair value gap or an order block. And with what I can see here, this is a fair value gap. Immediately the market reverses to this my fair value gap, the market started dropping. So once the market comes to my point of interest, is for me to switch to the lower time frame to look for confirmation that truly the market wants to continue with the trend of the market before I'll enter my trade. And I can show you many examples. Okay, after here also taking this low, the market reverses to the upside again, and then you go to your lower time frame to look for confirmation. As it's playing within this imbalance here, then you see the market falling down massively. Those are the three things I checked every time. Remember, the first thing, I check the trend of the market. The second thing I check is my trading range, and the third thing is to mark out my point of interest. After those three things, I look for confirmation that truly the market wants to continue with the trend of the market before I enter any trade. Here is one thing to remember. Don't trade blindly. Unveil the secret of trading with Trading Unveil Academy. If you found value on this lesson, like this video, subscribe to this channel, and I would like to see your comment on the comment section below, because in Trading Unveil Academy, we unravel the hidden mysteries in the financial market and demystify the complexities involved in trading. Thank you for watching, and I would like to see you on the next video. Bye.